The ECB held its monthly monetary policy meeting this Thursday, where it left policies unchanged. Gold did much of the same. We have Jim Wyckoff next. Joining me on the line this Thursday is Kitco Senior Technical Analyst Jim Wyckoff. Jim, good to be with you.
Hello, Daniela. Always nice to be with you.
So as I mentioned, Jim, the ECB held its monthly monetary policy meeting this Thursday. It didn't do much to its policies, leaving everything unchanged. And gold didn't react. And that's something I'd like to bring up with you today, is we're seeing all this data come out from the US, from China, from Europe, but gold is no longer responding, Jim.
Indeed, Daniela. I've noticed that for the past several weeks, that aside from the U.S. jobs report and the FOMC data that's been released, the gold market really has mostly ignored data out of the U.S. and out of Asia and Europe. Maybe reacting a little bit, but I would certainly say nothing significant the past several weeks. What has occurred the past several weeks, I think, is we've seen the geopolitical front calm down a bit. The Russia-Ukraine situation has moved well to the back burner. We don't have a geopolitical development that can spark any safe haven interest in the gold market. And what has happened is this lack of bullish fundamental news, fresh fundamental news in the gold market has allowed the bearish technical posture of the gold market to make the sellers have the upper hand the past few weeks.
What could be of concern, Jim, however, is a report that came out of the European Union on Monday showing inflation in the eurozone reached its lowest rate last month in more than 4 years at 0.5%. That's far from the ECB's 2% target. Could this be indicative?
Daniela, I think on that matter, the ECB is going to have to act on the very low inflation and the deflationary worries. I think that maybe next meeting, maybe meeting after that, you will see the ECB maybe make some stimulatory monetary policy moves, and that could be a bullish underlying factor for the gold market.
What could be a big shaker, though, Jim, is the job numbers out on Friday. Will you be watching that closely?
Yeah, the marketplace is going to be watching that number pretty closely, arguably the most important data point of the week, looking for around a 200,000 rise in non-farm payrolls in March. Anything that deviates above or below that level is certainly going to be market sensitive and probably going to move the gold market.
Jim, let's get to your Wyckoff market rating for gold and silver this week.
Daniela, I'm giving gold a Wyckoff market rating of 3.5. That's in the bearish camp. Prices are in a 3-week-old downtrend on the daily bar chart. Technical support for June gold comes in at the 1268 level, overhead resistance at 1300. Now for May silver futures, I'm giving a Wyckoff market rating of 3. We've got overhead technical resistance at 2063, solid technical support at 19.
Jim, thanks for joining us this week.
Can't wait till next time, Daniela. Bye-bye.
And thanks for watching this edition of Technically Speaking. Email us at newsfeedback@kitco.com. Thanks for watching.